for those of you that are new to earnings, you might find the earnings cycles as a stock trader. You might be able to take advantage of earnings cycles as an option trader. But let me share some things with you. Number one, the best times to find earnings opportunities. First of all, when you look on the entire calendar, we're talking January, right? That's when we report from the prior quarter. We also report for Q1 in April. All right, we report for Q2 in July and Q3 in October. Now, that doesn't mean that the other months don't have earnings. It just means this is the sweet spot. This is where we start seeing the majority of companies that report, because they either report on a calendar year or they report on a fiscal year. All right, that means that they end their years during these certain timeframes, and the bulk of that, those reports come out during those 4 months. All right, so let's say we're in one of those 4 months like we are right now. When are the most earnings reported during each week? Well, typically you won't hear about anything Monday morning, and you won't hear about anything on Friday afternoon. Tuesday, Wednesday, Thursday, those are the biggest days each week when it comes to earnings reports. Now, this week's reports, there's a few. There's a good dozen or so. But the biggest that I found were Delta Airlines, Constellation Brands, and Applied Digital. So let's take a look at the chart of the three, and then the one I picked. And here's a hint. The one I picked wasn't any of these. All right. But let's go ahead and look at these three, and I'm going to show you why. Number one, Delta. So here's Delta Airlines. And as you can see, Delta has a chart, as I blow this up so everybody can see it, where between, take us back to January. This is the quarter. And we can see that we had a high kick in just above $75. Now from February down to the beginning of March, we dropped from 75 down to the low 50s or mid 50s. That's quite a big drop. You can thank oil for that drop, because again, the two biggest things that come out of, two biggest expenses for an airline are what? People and fuel. That's pretty much it, labor and fuel. So we've had a rebound since then as they're adjusting those prices. But take a look at this red line. This red line is on the high side. Okay, I'm going to save that for a moment. So we have a chart that is pretty much in the middle of its 3-month range. Let's take a look at Constellation. Constellation has a lot of the same thing. Started out below 140, ran up to above 165, and then it came back in. It's created this symmetrical triangle where it too is in the middle of its 3-month range. But look at the red line. The red line is near the top of its 3-month range. And finally, Applied Digital, which is, it started out in January, moving to its highs at 42.5, moved all the way down to 20. It dropped 50% in the last quarter before rebounding a bit. And of course, what's going on with the red line on this chart? The red line is high. What is the red line, Tom? The red line is implied volatility, right? The red line tells me what the option traders are doing. When that thing is on the high side, it means options are expensive. When it's down near the low side, it means options are cheap. Typically with earnings, all right, with earnings, the week the earnings are actually coming out is when the Robinhood crowd is buying. That's the last time, the time you don't want to trade earnings. Is trading through an earnings report is the riskiest way to trade earnings. Yeah, I mean, you know what? If you want to get risky, I think going to Vegas makes better sense. At least the drinks are free. But here, the wrong way to trade earnings is to get right up on that earnings date and then go through it. We don't want to do that. What we want to do is look at how to potentially buy something before everybody knows about it and sell it when they're all getting on top of it. And that's the right way to trade earnings, is to get into an event and get ahead of it. So the best time to have bought, calls or puts, depending on whether you're bullish or bearish on Delta, Constellation, or Applied, was to do it a week or two ago, before everybody jumped on board and before the squawking heads behind me start talking about these and even further promoting, all right, further promoting higher implied volatility. How we scan for earnings is I like to go out prior to the week of earnings. I like to be out there 1 or 2 weeks prior to earnings. I want to find trades that back test where 3 of the last 4 earnings minimum, right, moved in the same direction before the report even came out. I want to make sure that I've got slippage that is low. That means to getting in and getting out, I can do so at a reasonable rate. I want to make sure that over time, the implied volatility has gone up because I want to ride that IV wave, right? And I want to be able to know that when the best day to buy and the best day to sell. Based on all of that, when are those best times to buy and sell, right? And putting all that information together, I'm able to scalp earnings like someone would scalp a major event, right? Usually the worst time to buy an event like F1 or the Taylor Swift concert is to go outside the stadium right before it starts and buy tickets, right? Because you're going to be overpaying for them. So we want to be the scalper. We want to sell that implied volatility to someone else and walk away with a smaller profit than taking a huge risk going through earnings, because there's a lot of times you'll go through earnings and the stock will actually go in your direction. And if you have bought call options that were overpriced, you could still lose money on that trade. My favorite trade, one of my favorite trades coming into this month. Well, guess what? It's April 6th. This one doesn't start until April 22nd because I could find nothing that I'm interested in until then. But I found 2 stocks in the month of April that I really like. All right. Annaly Capital is one of them. That has a buy date of 4/22 and a sell date of 4/29 when I'm looking at all this information. And you know what's happened? A year ago, it made 34% return on the at-the-money calls, right? Back, if you look back in October, same thing, buying them just 7 days before and selling them right before the earnings. Produced an 81% return back in October. Back in July, 137%. All right, April last year, 262%. So this one has the back data that tells us that it really likes to get pumped as we get closer and closer to earnings. So where's Annaly at right now? Annaly's trading around $21. All right, it's off of its highs above 24. But I don't care about the stock price. I care about the implied volatility. And the best time to start buying implied volatility on Annaly isn't today. It's not even next week. It is coming into the 3rd week and selling before the earnings come out on the 29th of April. So here's another interesting thing that I found about Annaly Capital. It's also a money calendar buy as we head later into April. As you can see there on the screen, 9 of the last 10 years, this one has moved higher, right? With its only loss being posted in 2022. So if you look at just the Q1 earnings, which we're going into right now, 9 of the last 10 years, this has moved higher. Last year was up 8% between now and running through the earnings cycle too. So what we're doing is we're taking a couple of things. We're looking at the applied volatility and what it's done, all right, over the course of the last 4 earnings cycles. But we're also taking a look at seasonality and what it's done over the last 10 years, all right, for Annaly Capital. And so summarizing this, Q1 earnings are upon us that are just kicking in. We haven't even gotten to the sweet spot, which is closer to the end of the month. What's my message here? Don't follow the crowd. You want to buy before they do, and you want to sell before the report comes out. And NLY, Annaly Capital, one of my favorites, starts on April 22nd, but I want to be out of it by April 29th.